Hi everyone, welcome back to my channel. Today we are going to continue the series on the historical topics on the CFE Day 3 from 2015 to 2021. And the topic today is going to be finance. If you want to learn about the other topics on the CFE, please check out my other videos in this series. If you like what you see, please consider giving this video a thumbs up and subscribe to the channel as videos come out weekly. So the overview for today is that we're going to go over what has been tested for finance on Day 3 of the CFE from 2015 to 2021. And then we're going to go over what candidates got on the CFE with what the Board of Examiners' comments were. And then finally solving the most tested finance topics on the Day 3 of the CFE. So here's a list of all the Day 3 finance topics tested from 2015 to 2021. As you can see, the most heavily tested topic is the cash flow analysis. Next is debt structuring, which can be asking about different financing options to purchase an asset, followed by lease versus buy options, and then ratio analysis, risk versus return, and then company valuation. The remaining topics here have only been tested once throughout the CFEs between 2015 to 2021, and they are liquidity concerns, bank requirements for a loan, and clawback of government assistance. So now you can see how candidates performed in 2015 and 2016. You might notice that in 2015, they broke down the finance AO into quantitative and qualitative. So make sure whenever you do any finance calculations, you always talk about both pieces, as they might be scored separately and you want to get points on both of them. In 2016, you could see how candidates had more opportunities to talk about finance, and on average, they got around 80%. So now let's address the elephant in the room. Why did only about half of the candidates get a reasonable mark on this AO? So if you look at the Board of Examiner comments, they said that in this scenario, you had to actually calculate the IRR for the different financing options. And my guess is many candidates didn't know how to calculate the IRR. If you're one of those candidates that don't know how to calculate IRR, make sure you check out the solution section of this video, as I'm going to go over how to calculate that in Excel. However, if you don't feel like actually learning it, I guess it's okay, because about 40% of those candidates that year didn't know how to do it either. The board continued talking about how we candidates just computed the total payments on an absolute basis without looking at the time value of money, or they just assumed that the effective interest rate was the same for all the options and then calculated the present value based on that. For strong candidates, they actually calculated the IRR for each option, which is different, and then they used each one of those to calculate the present values. Now let's look at the 2017 and 2018 results. You can see that in 2017, candidates consistently did fairly well on the finance required, and then in 2018, they did exceptionally well with averaging around 92%. Something to note here is that in 2018, all your financing assessment opportunities were all within your first case. So it's not necessarily spread evenly throughout all of your Day 3 cases. Now in 2019 and in 2020, you could see that candidates consistently again performed fairly well, except for in 2020, there was 2 AOs that candidates got below 75%. In this AO, candidates were supposed to provide a cash flow analysis to see if the company needed to borrow more money. The Board of Examiners said that weak candidates struggled in incorporating sufficient cash inflows and outflows in their analysis, and also didn't include any interest payments on the money that was borrowed. However, candidates did do a multi-year cash flow, which was correct. For strong candidates, they actually included sufficient inflows and outflows. In addition, there wasn't a lot of errors in their calculation. One of the key things that the Board of Examiners noticed was that when asked about how much money is needed to finance this idea, a lot of candidates gave them the net present value analysis, which is not relevant because you don't borrow money based on the NPV, you borrow money based on the net cash deficit of that period. So now let's talk about the May 2021 CFE. If you didn't notice, there's kind of a trend of always having 3 finance AOs in every Day 3 case. So now let's talk about this AO. Candidates were supposed to determine if they should either repair or replace the asset, and the Board of Examiners said that candidates were unable to do the calculation with minimal error, and also they didn't compare the 2 options on the same basis. Candidates didn't compare the 2 options on the same time horizon, or they didn't compare them using the same number of units that needed to be purchased. In addition, some candidates mixed up the recurring costs with the one-time costs. However, as I went through the case, I found that perhaps one of the main reasons why candidates performed so poorly on this AO was because the information needed to complete this was separated into 2 appendices that were not right after one another. So candidates actually needed to know what appendices were related to this issue, and then be able to find it in two different places. So if you weren't able to connect the two different appendices together to solve this AO, you really only had half the information to solve this problem. So if you want to continue watching how to solve CFE Day 3 finance questions, please click the video on the left. If you want to see other historical Day 3 topics, please click the video on the right. Thanks again for watching. If you like what you saw, please give this video a thumbs up and consider to subscribe. If you have any questions or comments, please leave it in the comments below.